Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at how to use the higher time frame DPs to help run your trades a bit further. And I'd like to have a look at a good example that's unfolded on one of the Indian markets we follow on the Nifty. But as usual, we start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. I'll put that another way. All professional traders know and understand, but more importantly accept, that losses can and will and do unfold. That's an important point. There always will be losses no matter what trading approach you use for looking at the markets. So this is how the Nifty unfolded earlier today, which is July the 17th, and I wanted to have a look at this TS2 buy setup here. By the way, we're using our MTPredictor add-ons into NinjaTrader 8 for this video here. So this is NinjaTrader 8 with our MTPredictor add-ons. You can see this was a perfectly valid TS2 buy setup with our MTP trend black. So that allowed you to take signals either side. And if we go to our 15-minute chart, let's have a look at what the large degree trend would have been. If I right mouse click on the low of the previous day, which was here, and I do Elliott wave intermediate, can you see how this was the end of a 5-wave sequence? Wasn't quite at the maximum wave 5 WPT, but it was the end of a 5-wave sequence. This MTP trend color was blue, indicated the large degree trend was up as well. So can you see how the previous day we were at the end of a wave 5 low, therefore the large degree trend was up, and so you had confidence in taking the TS2 buy setup on the shorter time frame chart, which was the 3-minute, which was about here. Remembering for our multi-time frame analysis, we look for time frames that are between 3 and 5 time frames separated from each other. So if you're trading on a 3-minute, like this one here, you'll be looking at 15-minute for the trend. If you're trading on a 15-minute forex, you'd look at hourly for the trend. If you're trading on daily charts, you'd look for weekly for the trend. So as you can see, this was a perfectly valid MTPredictor trade setup where the picture was clear, not only in the direction of our MTP trend color, but also in respect to our larger degree time frame chart. Remember, we're not a black box system. We don't just blindly take all the trade setups. We like to see a clear picture on the higher time frame chart, and that's what we had here. If you remember, on the higher time frame chart, we clearly had the end of a 5-wave sequence, so the large degree trend was clearly up after that. So the large degree trend picture was clear. Remember, that only happens about half the time. The remaining 50% of the time, markets are basically random and should not be traded at all. So let's place the analysis on this. So we hover our mouse over the blue buy bar, right mouse click, do analysis, and that then places our analysis on the chart. Remember, we use correct position sizing to keep our initial risk small under control, and over time we hope to have profits that not are just large in rupees in this case, but are large in relation to the initial risks. So can you see here how at the first target the profit would be in approximately 2.4R or 2.4 times greater than the initial risk. But what I want to look at in this video is, do you just come out at this first profit target and that's it, or can you use the higher time frame chart or the analysis on the higher time frame chart to help manage your trade? So in this case, if we go back to the 15-minute chart, we can use the potential target off the end of a completed 5-wave sequence to help manage our shorter time frame trade. If I scroll back like this, any time after the completed 5-wave sequence, the normal target for this is the DP from the prior wave 4. You should go back to the prior wave 4, which was here, right mouse click, place your decision point, and can you see how this would have been on the chart in advance? That's the beauty of these levels. They're leading indicators, or they're leading levels. They're there on the chart in advance. So this is an area of where the market is likely to go to, or if it gets to, you can anticipate a potential reversal at this level here. If I scroll out to see the rest of today, whoops, sorry about that, can you see how the market did indeed carry on rallying to get up to this 15-minute DP resistance area? So what would that have meant for your managing your trade on your 3-minute chart? But if I go back to the 3-minute chart, can you see how this was our first target on our standard 3-minute chart analysis, but can you see here how the 15-minute target was slightly higher? So rather than looking to come out just at the first target, let's grab and drag this risk reward level and come up to nearer the higher time frame target. In other words, we're using the higher time frame resistance area as our target for our 3-minute trade. And what's the result of this? Well, the result is that the profit is increased from a just grab that down again. So it's increased from our potential 2.4R profit, which is down here, up to a profit of about 4.9 or almost 5R, so 5 times the initial risk. And as you can see, that would have meant taking a very nice long trade to catch this strong rally here. But can you see how this allowed you to increase your potential profit by using the higher time frame target? So that's a little tip in today's MTPredictor video, is rather than looking for reasons to come out of trades early or as soon as you can, which is what most amateur traders do because they're normally working on scared money, what you want to try and do is what professional traders do, and that's trying to let your trades run. And in this case, what we're doing is looking for the analysis on your higher time frame chart to give you your larger support and resistance areas. In this case, our DP of our prior wave 4, because this was a completed 5-wave sequence. So this gave you the higher time frame DP target, and then you use that on your shorter time frame chart for a potential target for your trade. I mean, what you could have actually done as well is once the market got up to this level, you could then use your ATR stop if you'd wish to as well, and let that run up. So that would have been here. The blue dots, can you see them? The blue dots there, until you got up into the target, and then you could either look to take the profit there, or perhaps then run at the 1 bar low. If you had done that, would increase your profit a bit more, or if you've then just carried on using the ATR stop, you'd have probably come out on close as well. So some different ways to help manage your trade. But the main thing about today's video, and the main message in today's video, is using the higher time frame DP support and resistance areas as potential targets to help run your shorter time frame trades a bit further to help increase your profits.